I see that Jamie is with us. Now you're
Yeah.
finally with us as well. So why don't you go ahead and start your interview? Looking forward
Okay.
to hearing Jamie. We haven't
Okay.
had him in a long time.
Yeah, probably a year. Maybe it's been a year.
Yes.
Anyway,
Well, might be.
friends are friends no matter how much time passes in between seeing each
Let
other.
me
Like,
let me advertise, by the way, because I know he's not going to do it himself. Jamie has written a nice book about the markets and sentiment in the forex markets. I've actually read it. It's very decent and shows you how sentiment and how the crowd can very frequently pinpoint highs and lows in the market. So if you haven't read it, go ahead and buy it.
beautiful, Steve. How long did it take you to read it?
To read it, I read it within a day. I usually read all books within a day.
Yeah, you're a speed reader, Evelyn Wood.
I am.
Okay.
I am a speed reader indeed.
Okay. All right. Well, you know what? I didn't know that, Jamie. Welcome back. See, your rep precedes you with the partners at ForexAnalytix. Congratulations on the book. I'm expecting an autographed copy sent to me FedEx after this interview, buddy. How are you?
What's going on, Dale? How are you, man?
What has
What's
it been
going on?
here?
How are you?
I'm good, bro. I'm running my race.
I don't know. The last time I was on, I don't know if it was a year or if it was back. It might have been like last summer or last fall. I'm not sure. But, it's been a while.
Yeah, good to have you back. And Steve mentioned, I don't know if you heard it, Steve has read your new book about sentiment in the FX
It's
market.
actually not a new book, but yeah, I've read it.
Oh, it's not new. Okay. Well, I want an autographed copy, Jamie.
All right. Well,
buddy?
the publishers never gave me a lot of books anyway. So.
Oh, okay. Okay. All right. Well, I made a few pips this week. I'll go out and spend a few bucks. So, Jamie, I want to get to the markets with you, but it's been such a long time since I've asked you this question. I don't remember, and I usually have the memory of an elephant, but I know you made a major breakthrough in your career with daily FX, but I forgot how it started for you. Point A, your first entree into the business and becoming a trader, because, I want to give people hope that, it's not easy to get going, but if you have perseverance, like I know you have, you can make an impact on the industry and your life. So how did it begin for you, man? Who do you blame for you getting involved in this?
Well, I guess originally I'll blame the sickness, right? The market sickness on family from farming.
Oh, that's right. Was it cotton?
Yeah, that's right, cotton.
Oh, now it's coming back to me. Okay, so all right. So right away, your family was probably hedging cotton, and you started to watch prices fluctuate, and you had an interest when you were young. Are you there?
Yeah. You cut out for about 5 seconds there, but yeah.
Huh. Okay. All right. Well, cotton farmer. I remember Jimmy Rogers saying during the last commodity boom that the guys driving Ferraris weren't going to be venture capitalists, but they were going to be guys driving a tractor in the cotton fields.
Yeah, that's right.
All right. So
there was a period back in the 70s when the most millionaires per capita were actually in Southeast Missouri. In Saettele, Missouri, was the most millionaires per capita because of cotton farming.
Oh, cotton in Missouri too. Okay.
Yeah.
All right. So I know you're in that state, and I think it's the first time we've talked about the yuan together. So you're looking at this yuan. Do you consider it a linchpin for what's happening in other markets? I know some people watch the yuan against gold and You know, the Chinese said they're not going to weaponize the yuan, but you know, we have a lot of brinksmanship happening right now in Washington. Tell us what you see and what the implications may be here.
Sure. Well, going off just the chart here, you've got a we've got a really clear, what I just call it, clear structure. I mean, if I zoom in, let's see here, we'll get rid of, let's just go to a weekly chart here. All right, so here's a weekly.
Right.
And if we draw our fork, the importance of the center line and how markets have been trading around it for the last couple of years. So, right, so we had here the big breakdown in 2017 and into March, and this was real. I mean, to me, this is what's driving everything. You know, this was the dollar decline, right? Not just here, but euro and elsewhere, and then this was the big dollar rally, right? Let's just take this and compare DXY or something, okay? We'll go DXY. Actually, we'll have to go here.
Okay, I see.
I mean, yeah, right. So this is where the emotion has been, and to me, this is where things are clear. Volatility clarifies, right? So when you have markets being like the euro right now, which has been so quiet for quite an extended period of time, I find it really difficult for me, the way that I trade and look at the market. It's difficult to kind of analyze a market from a sentiment standpoint and from a technical standpoint when it's not really moving.
When it's neutral, you need extremes, right?
Well, not just extremes, but you need to feel it. You need to be in the rhythm,
right? Instead of a chop
right?
fest.
And there's just when there's no music. So exactly. So we've had great levels here with dollar yuan, and you know, just going back to this chart, right? Coming in here early in the year, why, you know, did I have an idea that maybe the dollar was going to turn higher? You know, support. Okay, we came into support here, and sure enough, you know, if you want to go to a little more traditional indicator stuff, you had some nice divergence here on the lows, right, with RSI and all that stuff. A little base. So yeah, this is a chart that bears watching clearly. As I'm sitting here doing this, we just hit the 618 of the drop. Here we are.
Yeah.
You know, now to me, the more important level is going to be the center line up here, which is going to be more like, you know, 691, 690, 90, 691. And you can see why the precision with which the market has turned it around the center line right here. So, oh, am I there?
Yeah, you're here, but you are cutting in and out.
Okay.
But we'll just continue. So that center line there, Jamie, that you're looking at, do you have a macro view that the highs that we made in September of last year, that we're going to take out that big round number of 7, and would that be a problem for, say, S&Ps and the dollar being too strong if that happens?
Probably is my view. So, all right, my view on this.
You're looking to short it up there.
Up here, sure.
Yeah. Okay.
You know, look, if you do the kind of the math on the tariff stuff.
Yeah.
Right, and because the only way that they can allow, you know, kind of take this and
with a weaker is to debase the yuan.
Yeah. So,
okay.
You know,
weaponize
some back of the envelope math on the yuan. I mean, if it is, I mean, it gets you up towards, you know, probably 710, 715, which is going to be up here on this parallel anyway.
Okay.
But like, you know, I'm not forecasting that it's going there. Like, you know, it's kind of, you kind of take it as things happen and take in new information. So, you know, when we were at support, and you started to see reasons that you should be a buyer, as noted before with the, the divergence and whatnot, and sentiment the way it was. Now, I don't know, we'll see how we head into the weekend, but like, I'd be looking at two levels to trade here. I'd be looking here again, the 691 roughly, and then I'd be looking back towards the 679 to 680 area. Just look across the chart. This is the 38.2 of this down. Yeah. Right. This was support here back in August.
Right. And the lows that held this spring, if you look left,
spot.
The lows that held this spring, if you look left, were a very important level, 670 on the way down. That's 670. So yeah, so the market has a memory. Do you look left, Jamie, or are you looking right when you trade?
Well, I'm looking left first, because if I look right, there's nothing except for white spaces.
So that's where you have to use your imagination, my trading warrior.
Yeah, I guess. Well, I mean, yes. No, totally. Right. I'm all about imagination, but the first thing I'm doing is looking left. That's for sure.
Okay, because the market has a memory. So you're looking at this one thing. I was looking forward to talking to you because I know you're pretty active, and it probably plays into this. And you love bonds. You love trading bonds, right? Interest rate type instruments, and there is a big debate going on right here. To me, the 10-year looks like it could make another low, take out that 235 yield level, and that might be it. I'm actually looking for some exhaustion up here in the bonds. I'm wondering what your work is saying here. Oh, you're looking TLT?
Yeah.
Okay.
So.
All right.
Yeah. All right, so let's go TLT. Here's why I'm going TL. We can look at the 30-year as well, but
TLT is great. I trade it. I think it's a great proxy. Very good ETF that's liquid.
It's a great proxy. Yeah. It actually channels better on this long-term channel. So yeah, we are at what I would call a huge energy point right now in the bonds and TLT, what have you. And so we go back to the 2007 low, right? Draw your channel. Look where we are. Okay, 200-week average. All right, but more importantly, we are at the center line of the entire channel. Okay, so we go back to, let's go to the daily chart, and you can tell me, just looking left on this chart, I would say that this area, the center line, is pretty.
Yeah, it pivots, dances around that pretty good,
and it's been even more. It's been even more important, with precision, I should say, over the last year plus, so 14 months. This is March, but you can see the action that you get around this. So big breakdown, right? Resistance, 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 resistance.
Now we're trading above it.
Big gap up. Yeah. So how we resolve here, I think, is to
the upside. One to the next line.
I think it's to the upside. Like I head into, so we're gonna open up here. Bonds are up a little bit, not much. I mean, you're up 42 basis points right now on the 30. But yeah, I'd be looking essentially at 120, call it 124 over the next week or so, if you can get it. We're right now 125.14. We're up towards the highs from yesterday right now.
Okay, so where's that next line come in? And that's not a center line, but was there pretty good action on the next span line above it? That it looks important to you if we got there?
So this level up here is going to be 130.
130.
Well, so I don't. The more important level to me is 130 is going to be up here. Just bigger picture. I'm talking 137. And here's one reason why we talk about that. So in median line analysis, we talk about a concept of symmetry.
Okay.
So in symmetry, right, you're talking about going from this we call the 25 line, right, 25% up in the channel, 50 line median, 75, and then 100 line the top parallel. Well, where'd you come from? We came from 25 line, right?
Right.
Look what happened when we came from the 25 line last time.
Interesting.
You see where we spiked into?
Yeah.
That was the October 2014, like some people called it kind of a flash crash. You remember that flash crashing yields, but that was 2014. That's where we went to. Okay, that was the ultimate target, and then we ended up going to the top of the channel. But that's where you're looking now. Can we pause somewhere else? Of course, but this is my focus. This is where I think the market has a magnet. This is where I think it's headed.
Okay.
And
137.
Yeah.
Okay. And closes back under 124 might change the picture for a little while.
Yeah, absolutely. I mean, you start to get back
very tight risk trade. Nice R to R if you.
Well, that's the best part to me about median line analysis is you're trying to trade around the edges, and so you're really by definition trying to skew in your favor. So take a lot of losses, but they're really small.
Right.
And then once you catch one,
Right. Yeah, And I mean, this one you're talking about from 24, where it's at now, risking, maybe a point to make 13. Pretty good profit risk ratio if you. Yeah, let me ask you something though, Jamie, because this is my short.
Don't get me wrong. You too. I mean, you'd be.
Okay.
You'd be out of stuff. You'd be out of some stuff once you took out these highs over here too. It's not like I'm going to say it goes to 137 and then we spike up through 129.60 and go 130 and then I'm like, well, I'm not going to do anything about it.
Yeah, you book things along the way and hold a core position. Yeah, that's a question I want to ask you, Jamie. It's probably my weakest suit in the business. It's one thing to make a great call and to make a great trade, but for a lot of people, including myself, a great hold is really one of the most difficult things to do. How do you accomplish holding positions for longer term objectives?
Number one, I'd say stay away from the screen, I guess, would be one of them. Go do something else for a little bit rather than obsess. Stay away from too many intraday charts.
Okay. So manage, or if you're going to stay in front of your screen, do you ever just manage your position from a higher time?
I mean, so on that note.
Yeah.
Yeah. Wait for daily closes, or maybe set some rules. Like say, I'm not going to trade during, one of the rules that I've tried to set. I say try to set because I did set the rule. I'm not very good at following it all the time, but is I don't like to trade after or at least FX. I don't like to trade FX after Europe closes.
Interesting.
So notwithstanding like a Fed day or something like that, but after it's like what my mom used to tell me, when I was going out as a teenager, nothing good happens after midnight. So nothing good happens after Europe closes. For the most part, you kind of go into a drift, right? And you can overtrade that way. So
okay, well, that's an interesting rule. So what time are you getting up in the morning there in Missouri to trade Europe?
Well, it depends. Lately I haven't really been having to get up too early because I've been doing a whole lot. So if we start to move again, which we will at some point, then I don't know, I'll be up at 4 here.
Okay.
So
I remember
5 o'clock in New York.
I remember last time when I brought up S&Ps, you didn't even want to talk about them. You want to talk about them today?
Yeah, let's go to some S&Ps. All right, so here we go. Let's do this. Let's go.
Is there a fan line that goes to the sun?
Well, we've got some pretty crazy things here.
You have an angle? That's parabolic fan line?
Well, all right. So this is, let's go to the NASDAQ composite.
So you have throwovers even on your extreme fan lines.
Okay, so here is the NASDAQ composite, and it is kind of a bit messy. We can get rid of some of this crap over here. I was sitting here playing with charts last night. All right, so here's the NASDAQ composite. Actually, probably a little cleaner on the Qs. Okay, so here's the Qs. All right, so here's another concept of median line analysis that we can look at. This is your original slope that we call it. Okay.
Right.
This is any time frame, by the way.
Okay.
You do it on any time frame. But your original slope, this is your original angle. So like this is, at the most basic core definition, this is your uptrend angle line in the NASDAQ, okay, from 2002 to 2008, all right? Now, you take the parallel extended over here.
Yeah.
That level was more or less resistance. You broke through, you went for the run. The distance between here and this line is the distance between up here and the center line. That was resistance, okay?
Interesting.
Once you broke through that, you go to the next level. The next level up is the full width. And look where we stopped.
Yeah.
Okay. Now that's just a channel.
Right.
If we draw the pitchfork, right, which is a channeling technique, the pitchfork is the steeper one. Well, that's also where we stopped, at least back in 2018. So that's still higher. I don't know if we're going there. I have no clue. But I do know that we've stopped at a place that would not be considered random, right? So that has my ear. And when we then go down to a shorter time frame, and I am going to go short term on this, I am going to go, let's even go 10-minute here. Okay, this is now the Qs. I'm looking at the Qs here, and this is a channel that I've drawn in from the late Jan lows, which channels beautifully. And we are going to open. Right now, Qs are trading 183.75. We are going to open right here on this line right now. Okay.
Wow. Yeah.
So is this 5? It may very well be. You know, I have, you know, I'm of the mind that you probably want to, if you're short, you probably want to pay attention to this coming into this open. You've also got 182.83 high over here from March 21st.
Let me ask this hypothetical. If this is 5.
And you got a 50-day average.
Okay, so you have confluence there too.
Mm-hmm.
So my hypothetical is if it holds in that region and, you know, we could poke through trend line.
50-day average too.
Okay, we hold there. And since it's a 5-wave count from the high, would you be expecting a 2? Or is this a 5 that's corrective and then a new high? Would you be expecting a failing rally after a 5-wave sequence like this?
That I don't know, but I do think that the trade from a risk-reward standpoint is going to be to look for, and I think you have to pay attention to the character of the rally. So if we come in here and we get, you know, we screw around for a little bit, and then you get a big move up towards one, you're going to be looking for resistance probably up near 188.10, 188.50. And the reason for that is that 188.50 is the high from last year, and 188.10 is where we peak. Okay. So I'd be looking for that level as maybe where you'd fail. Another way, what I was saying is watch for the character of the rally. If it's a rally on clear news, right? If it's a news-induced rally,
like a trade deal.
A trade deal, right? Those are the ones you want to fade, right? Those are the ones you want to fade. So that's where I would go with that from a tactical viewpoint. Yeah. So that's what I'll be looking for.
Okay. And any instrument you want to wrap it with?
Yeah, I actually wanted to look real quick at, I want to show you dollar yen. This is one that we've been on for a while, and I think that we may have just seen the high in dollar yen for the entire consolidation that started in 2016.
Wow. Implying what? Taking out 104 heading into the 90 range? Wow.
Implying eventually the mid 90s.
Okay.
So if we go here, all right.
Well, that would make sense. Here's our big A wave and bonds, right? 137 bonds and 93 US dollar yen kind of makes sense, doesn't it?
Yeah, certainly. And if we've got, all right, 3 waves up, 3 waves down, 3 waves up, 3 waves down, 3 waves up. All right. So we've got ourselves a big old Elliott triangle. You got a 200 week, you got a 50 week. I'll point out that on every time frame, price is below every important moving average. Okay, you've got you know, the dailies, weeklies, what have you. There's no real solid, say, uptrend objective, like moving average type support that's sitting below the market. So this is kind of my bigger macro view on dollar Japanese yen. If I go to real quick a short-term chart,
and I wanted to ask you about sentiment because you wrote a book about it. So does sentiment also line up in favor of a decline?
With yen?
Yeah, US dollar yen.
With dollar yen?
Yeah.
Yeah, I wrote some things on just over the weekend. There were a couple articles, and it's not, it hasn't been so much of a dollar market, right? But there was a Reuters article. I saw a Reuters poll. I don't know if you saw that one about, strategists are now calling for a stronger dollar. This is after 2 years of calling for a weaker dollar. There's some capitulation there.
Yeah.
But it's not going to be like a dollar, like we're seeing dollar won higher, right? Like you might get, Aussie might get hurt for a little bit, but in that sense, I do think you want some dollar short exposure, and here's the place to do it. Now, here near term, this lines up beautifully with what we were just talking about with the indices. We have a 5-wave down on dollar yen. We are right at support. We're on it. So I think we get a bounce here, and then you want to be shorting up at 110.80 to
because it didn't fill the gap, and this is the first gap on the chart. It left Sunday. I think it's significant that it wasn't filled when it tried to this week. Don't you?
Yeah, absolutely. This
may not be filled. Yeah, it may not. A lot of people will think the gaps are always filled. Yeah, maybe 10 years and bank account ago, but they're not always filled. You could go broke trying to trade that way. So, wow, man, what a great.
Yeah, I'm pretty sure that the euro gap from
that's going to get filled.
It's still not filled, right? But I don't think you want to be short and wait for it to get filled. So.
Yeah, that's a great analogy too on the Macron victory. Jamie, let's not let another year pass. Your content and your eyeballs are, they're diamonds. Okay, so why don't you show people, since sometimes it takes a long time for you and I to get together, where they can find you.
All right, sure. So this is the post from last night, actually. I'm clicking on, so you can see this is the dollar yen chart from last night. We're looking here, boom, all that good stuff. And you just go to SB Trade Desk. So SB Trade Desk, and that's it.
You and Michael are still Siamese twins, right?
Yep, that's right. Michael.
Okay.
Boy, all right, and we're together in this venture. So
I hope that your subscriber base triples by the next time I talk to you.
Oh, Dale, you're the best. This is a good way to start the day. Let me tell you, I like talking.
And I miss talking to you, Jamie. So let's not let this much time pass between the next one, and I'm already scheduling for August. So after the interview, let's get together and set something up for the end of the summer. Okay, bro?
You got it, man. You got it.
All right, everyone. That's Jamie. You could at Jamie Saettele. His Twitter handle's at Jamie Saettele, and you can go to his website. And you have any trials going on or anything, Jamie?
Yeah, we do trial. Do 40% off for the first month.
Okay.
And if we do anything else, any other trial, I'll certainly tweet it out, and I'll include you on the tweet so that all your.
Okay, I appreciate it, man.
All your people know.
Okay, so thank you, my trading warrior brother. Good hunting, and thanks for edifying the F.A.C.E community today, Jamie.
All right, Dale. I'll talk to you later, man.
All right, bro. All right, everyone. You're welcome, Hamit. I'm glad you enjoyed it. Okay, and that's a wrap for us. We'll be back here for TGIF. Good hunting the rest of the day. Go join Blake and the guys in members chat. Remember, don't just count your pips, count your blessings. I do. It's okay. Don't worry about caps, Alina. And I don't sweat the small stuff. And you know what? Most of it is. So enjoy the rest of your day, warriors. See everyone for TGIF tomorrow. Adios. Thanks again, Jamie.